Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is preparing an income statement. This is a video, 3 videos we have about preparing financial statements. This one, income statement, statement of stockholders' equity, the link is in our video description, and balance sheet, the link is also on the video description. And they should be seen and they should be done on this order: income statement, statement of stockholders' equity, and balance sheet. Okay? So, uses of financial statement: a corporation prepares an income statement and a balance sheet similar to those used by a proprietorship. A corporation also prepares a statement of stockholders' equity and balance sheet. So what do we have? First of all, the operating revenue section of an income statement for a merchandising business. The revenue earned by a business from its normal business is called operating revenue. The amount of sales less sales discount and sales return and allowance is called net sales. How does it work? Let's go to our Excel file. And here, one sheet for every financial statement. So let's start with the income statement. So here we have our adjusted trial balance. A lot of accounts here, starting on assets accounts. Then, accounts payable here, liabilities, capital stock, stockholders' equity, and now we have our income statement. That is these red ones. And here the total, they are balanced. Additional information for our income statement: beginning balance of merchandise. So, okay, how do we start it? So let's come here with sales. So, first of all, sales. And then, how much is our sales? Or we can start it by operational revenue. And then, sales. How much it is? Equal. And we can copy and paste. Here, sales, how much? 632. Okay. And what do we have? Oh, so sorry. Sales is here, 632. Now, what do we have? If we go back to our PowerPoint, sales less sales discount and sales return and allowance is called net sales. So less sales discount and sales return and allowance. Okay. Copy and paste: sales discount, sales return and allowance. How much? Sales discount. And then sales return and allowance. And here we sum both. And then we total in the next column. And now what do we have? The net sales. Why net sales? Because amount of sales less sales discount and sales return and allowance is called net sales. So net sales, our total will be here, so 632 less 5, 626. And here the last column is these great groups. What is the percentage of them considering the net sales? So this one divided by this one. So, okay, net sales is 100% of the net sales. Quite obvious here. Now, what's next? The cost of merchandise sold. So the original price of all merchandise sold during a fiscal period is called cost of merchandise sold, or cost of goods sold, or cost of sales. So let's find it. Cost of merchandise sold. If you remember our classes about cost of goods sold, the video is also in our video description. We start with the beginning balance of inventory, of merchandise inventory. And now, how much it is? That is this additional information, beginning balance. And we add our purchase. How much is our purchase? So, let's combine here. Purchases, $250. For less, let's copy and paste here, purchase discount and purchase returns and allowance. So let's add it here. Purchase discounts, purchase returns and allowance. And then, how much is it? Equal sum, both. And now we have our net purchase. How much is the net purchase? Purchase less purchase returns and allowance, $252. And if we combine both, then you can double check our formulas and so on. Cost of goods available for sale. That is beginning inventory plus net purchase. And then last, ending inventory. Ending balance of inventory. And now, where do we find the ending balance? It is not here because inventory is an asset account. So the asset account is here, merchandise inventory. And now we have our cost of merchandise sold. That is, cost of goods available for sale less ending inventory. Let's add here the less ending inventory. And now, how much is the cost of goods sold or cost of merchandise sold compared to our net sales? It is 41% of our net sales. And then, what do we have here? Sales or net sales less cost of goods sold. We have our gross profit. Our gross profit, net sales less cost of goods sold. And then the same formula, gross profit divided by net sales. So our gross profit is 58% of our net sales. So if we sell $100, our gross profit will be $58.82. What else do we have? Operating revenue remaining after cost of merchandise sold has been deducted is called gross profit. And gross profit is also referred to as gross profit on sales or only gross profit. Now, let's go on. Expenses incurred by a business on its normal operation are called operating income. Or operating expenses, sorry. So let's find our operating expenses. Okay, purchase, so on. So here we are good. Now our operating expenses. It will be all of these operating expenses until federal income tax expense and interest income or interest expense or interest loss. So these two here, they are not on the operating expenses. So let's add them. Advertising expenses, they are here. Advertising expenses. And now let's copy and paste these formulas and we will have all of this, but no federal income tax. And here, now we have the total of operating expenses. We sum our numbers. Let me move here, or better, here. So $255,737.47 is our total of operating expenses. And then income, or the operating revenue remaining after the cost of merchandise sold and operating expenses, is called income from operations. And we usually call it as operating income. And the other one, gross profit on sales. So gross profit on sales. And now operating income. And the operating income is net sales minus cost of goods sold, or our gross profit minus our operating expenses. And we do the formula, the percentage of net sales. Again, 42 is our total operating expenses. And the operating income is 16.43% of our net revenue. And now, guys, let's skip this federal income tax for now. Let's go to the interest income. Interest income. Here is a credit number, so it is a revenue. And operating income plus interest income is earnings before tax. So here we will sum them. And now the same formula for our total. And this guy is the multi-step income statement. We have another one, much basic. We have only one column and no subtotals. That is called the single step. No one uses it anymore. So now earnings before tax. To finish it, federal income tax expense. So an expense is a negative number, 23. And now our net income, it is 103 less 23, 79. I only copy and paste here to double check. Wow, it is right. So here, again, the formula, the percentage based on net sales. It is 12.75% of our net sales. So here, guys, see how nice it is. Because with this, especially with this percentage of net sales, we can map where our money is going to. Based on net sales, 626,000, a lot of money. However, our net income is 79, only 12% of this number. And here we can see all of our revenues and expenses on a much easier way than in our trial balance. So now we summarize our number in a more intelligent or smarter way. Okay, guys, this is not so easy. I admit it. So watch it anytime you want. And guys, subscribe to our channel. Very good to us. And very good to you as well. You will be the first one to know when a new video arrives. Questions or comments, please leave it here or email me at jscarpin@gmail.com. Have a very nice day and thank you so much for watching this video.